Hi everybody, and welcome to the ICE Futures market commentary this week for the US dollar index. You're speaking with Nick McDonald. What we had last week was the price coming up and approaching up to this big number of 79, which was not only a round number but also these old lows, and pulling back into some Fibonacci retracement levels within a downtrend. And we had a perfect fall right off that level. So another good example of what can happen around these levels we're identifying. They don't always hold so perfectly, but this one came up, touched it on the nose, and has fallen straight down as expected this week. So really nice little move there on the dollar index, and just looking now like continuing in its downtrend. So they're looking weak, looking bearish, and in the longer term view, my view has not changed, that now based especially on this monthly chart with these two bearish candles and now breaking down through the low of last month as well, that we should be coming down here and testing these lower levels before we decide at that level whether or not price breaks down through or continues up. So for now I remain bearish. The daily chart looks bearish, the monthly chart looks bearish. We should get down there. Just having a quick look at the weekly chart, it's a little bit less decisive, especially where we had these bullish candles here and there was the prospect of breaking up. But the monthly has to overrule the weekly, and the monthly is going to be drawn down here to at least these lower levels, 76 to 75. And now that we've got the averages starting to fan downwards, 10, 20, 50, 200, we've just been up into those averages and now rejected. This week, a real key measure will be a breakdown through the low of these last 2 weeks. If we break down through that low, it's just extra confirmation for me that we're likely to continue on down. Just highlighting a couple of things that are going on out there in the other currency markets. One thing as well to say, to put a little bit of downward pressure on the US dollar, is the upward pressure which we're getting on the British pound. And the British pound is just starting to look strong for really the first time in quite a long time. If we just come out here, and this was the crisis back in 2008, and the pound was probably hit, harder than anything. And what we saw here was a big move down. We had a big move up again, soon after, struggling to recover, and then a move back down and starting to look like actually no, the pound wasn't going anywhere. But we're seeing some really good signs now. And if we look at this on a monthly chart, what we'll see is that a monthly chart has really started to turn around in terms of we've put in this higher low, we came up, we tried to go lower, we've put in this slight higher low here as well. So if we just look at this, we've got here a higher low than the previous, and then we've got another higher low here with this nice bullish candle, and now breaking up through the highs of those candles, breaking up through major support and resistance around 1.6, and a major big number where prices tested and failed and held those levels many times. We're now pushing up through it. I just want to see a little breakout through there, which we're so close to doing. We're almost there, and I'm expecting a good recovery here on the pound, for the pound to push up and probably test 1.7, while the dollar index is pushing down. So a little opportunity there on the pound. Just one other thing to talk about this week is on the New Zealand dollar. And just sticking with our theme of these big major support and resistance levels, rather than it being any weighting at all in the US dollar index, but just looking at the Kiwi dollar here. And if we're sticking with our theme of dollar weakness, well, Kiwi dollar is strong, so New Zealand dollar here, and it's also at a major level, 7,500. Look at, tested back here, tested all through here many times, tested here, finally failed, came up and found resistance, found, hovered around that level, came back and found support, and we're back at that level now. So if I've just worked through all the different touches on that just in the recent time there. If we zoom out, even all the way back in 2005, we found resistance at that exact, ever so slightly before that level. So it's a major level, and if the US dollar index continues to weaken, and therefore the US dollar weakens across the board, the Kiwi dollar is likely to strengthen against the US, and it's in a perfect place there for opportunity. So that's something I'll be watching this week, but just coming back and clarifying my views on the US dollar index, I am looking for a breakdown through the last 2 weeks' lows, which are pretty much the same low here. So looking for this to break down through the lows of these last weeks. That will put the weekly chart being bearish as well, and therefore going to be looking for some more opportunity on the way down to 75 to 7,600. Bear in mind there's opportunities here on a swing trade basis. There's also opportunities to come down to lower time frames and to look for opportunities on an intraday basis as well, and just to be trading with the overall major momentum of the market. Happy trading all, have a great week. Don't forget that it's a public holiday in the US on Monday. The market is open but only for a few hours, so it's going to have most of the liquidity and the action kicking in on Tuesday this week US time. Have a wonderful week. Speak to you soon.